Hello traders, welcome to the show that's all about making you money in the crypto markets. Today we're diving deep into the world of candlestick patterns, the secret language of the charts that can help you predict the market's next move like a pro. Listen up, because these patterns are the key to unlocking massive gains and avoiding catastrophic losses in the volatile world of crypto. We're talking about time-tested formations that have been used by traders for decades to read the market's mind and make killer trades. Get ready to take notes, because I'm about to break down the top 7 candlestick patterns that every successful crypto trader needs to know. We're going to uncover the secrets behind these patterns and show you how to spot them in real time so you can start trading like a Wall Street wizard. Alright, let's kick things off with the Doji, a candlestick pattern that screams indecision. This little guy looks like a plus sign or a cross, with the opening and closing prices practically the same. It's like the market is stuck in neutral, with buyers and sellers locked in an epic tug-of-war. Now, a Doji by itself doesn't tell us much. It's like a whisper in a crowded room. But when it appears after a strong price move, that's when things get interesting. It's like the market is catching its breath after a big sprint, and it could be a sign that the trend is about to reverse. Think of it this way. You're driving down the highway and suddenly you see a stop sign. You don't know what's ahead, but you know you need to slow down and assess the situation. That's what a Doji is telling you to do in the market. Is it a sign that the bulls are getting tired and the bears are ready to take over? Or are the buyers just taking a breather before pushing the price even higher? We need to look at the context, the other technical indicators, and the overall market sentiment to get the full picture. But remember, the Doji is a powerful signal that something big could be brewing. It's a wake-up call to pay attention and be prepared for anything. So keep your eyes peeled for those Dojis, folks, because they could be the difference between making a fortune and getting left in the dust. Now let's talk about a pattern that gets me fired up, the hammer. This bullish signal is like a beacon of hope in the midst of a downtrend, a sign that the bulls are ready to fight back. Picture this. The market has been in a free fall, prices are plummeting, and everyone is panicking. But then, out of nowhere, a hammer appears on the chart. It's got a small body and a long lower shadow, like a hammer that's been slammed down on the ground. What does it mean? It means that the sellers tried to push the price lower, but the buyers stepped in with force and drove the price back up. It's like the bulls are saying, "Enough is enough. We're not going down without a fight." Now, not all hammers are created equal. The longer the lower shadow and the smaller the upper shadow, the more bullish the signal. And if the hammer appears after a prolonged downtrend, it could be a sign that a major reversal is underway. But remember, just like with any other pattern, we need to confirm the signal before we go all in. Look for other bullish indicators like increased volume or a break above resistance to confirm that the hammer is the real deal. So the next time you see a hammer on the chart, don't be afraid to grab your hard hat and join the bulls on the front lines. It could be your ticket to big profits. Alright traders, now it's time to talk about a pattern that sends chills down my spine. The shooting star. This bearish signal is like a warning shot across the bow, a sign that the party might be coming to an end. Imagine this, the market has been on a tear, prices are soaring, and everyone is feeling euphoric. But then, just when you think the good times will never end, a shooting star appears on the chart. It's got a small body and a long upper shadow, like a rocket that shot up into the sky but is about to come crashing back down to earth. What does it mean? It means that the buyers tried to push the price higher, but the sellers stepped in with overwhelming force and drove the price back down. It's like the bears are saying, "The party's over, folks. Time to go home." Now, just like with the hammer, the length of the shadows matters. The longer the upper shadow and the smaller the lower shadow, the more bearish the signal. And if the shooting star appears after a prolonged uptrend, it could be a sign that a major reversal is imminent. So be on the lookout for those shooting stars, folks. They're a clear sign that the bears are lurking in the shadows and they're ready to strike. Don't get caught off guard. Alright traders, are you ready to talk about a pattern that screams bullish reversal? Let's dive into the bullish engulfing pattern, a two-candle formation that can signal a major shift in momentum. Imagine this, the market has been stuck in a downtrend, with sellers in control and buyers nowhere to be found. But then, like a bolt from the blue, a bullish engulfing pattern emerges on the chart. It's like a giant green wave crashing down on the bears, signaling the start of a bull run. Here's how it works. The first candle is a bearish candle, representing the continued dominance of sellers. But the second candle, a bullish candle, completely engulfs the previous candle's body, signifying a powerful surge in buying pressure. This pattern tells us that the bulls have finally awakened, and they're not messing around. They're stepping in with force, buying up all the selling pressure and pushing the price higher. It's like a pack of hungry wolves finally cornering their prey. The bullish engulfing pattern is even more potent when it appears after a prolonged downtrend or at a significant support level. It's like a coiled spring suddenly releasing, propelling the price upwards. So, keep your eyes peeled for this bullish signal, traders. It's a telltale sign that the bulls are back in town and ready to party. Now, let's flip the script and talk about the bearish counterpart of the bullish engulfing pattern, the bearish engulfing. This two-candle formation is like a dark cloud descending upon the market, signaling a potential shift in momentum towards the downside. Imagine this. The market has been enjoying a nice uptrend with buyers in control and prices steadily climbing. But then, out of nowhere, a bearish engulfing pattern rears its ugly head. It's like a bucket of ice water being thrown on the bulls, bringing the party to a screeching halt. Here's the breakdown. The first candle is a bullish candle, representing the continued optimism of buyers. But the second candle, a bearish candle, completely engulfs the previous candle's body, signaling a surge in selling pressure that's too strong for the bulls to handle. This pattern tells us that the bears are no longer content with sitting on the sidelines. They're stepping in with force, selling into the rally and pushing the price lower. It's like a pack of hyenas finally catching up to a wounded gazelle. The bearish engulfing pattern is particularly ominous when it appears after a prolonged uptrend or at a significant resistance level. It's like a balloon that's been blown up too much and is about to burst. So, be wary of this bearish signal, traders. It's a warning sign that the bears are on the prowl and ready to feast on the bulls' complacency. Alright traders, let's talk about a pattern that brings hope to even the most battle-scarred bears, the morning star. This three-candle formation is like the first light of dawn after a long dark night, signaling a potential shift in momentum from bearish to bullish. Imagine this. The market has been stuck in a downtrend, with sellers in control and buyers afraid to even dip their toes in. But then, just when all hope seems lost, a morning star pattern emerges on the chart. It's like a beacon of light cutting through the darkness, signaling that a new day is about to dawn. Here's how it works. The first candle is a long bearish candle, representing the continued dominance of sellers. The second candle is a small-bodied candle, either bullish or bearish, that gaps down from the first candle, signaling indecision in the market. Finally, the third candle is a long bullish candle that gaps up from the second candle, confirming that the bulls are back in control. This pattern tells us that the selling pressure is weakening, and the buyers are starting to gain momentum. It's like a sleeping giant finally starting to stir. The morning star pattern is even more powerful when it appears after a prolonged downtrend or at a significant support level. It's like a phoenix rising from the ashes, signaling the start of a new bull market. So keep your eyes peeled for this bullish reversal pattern, traders. It could be your ticket to big profits in a market that's about to turn around. Now let's talk about the bearish counterpart of the morning star, the evening star. This three-candle formation is like the sun setting on a bull market, signaling a potential shift in momentum from bullish to bearish. Imagine this. The market has been enjoying a glorious bull run, with buyers in control and prices reaching new all-time highs. But then, just when everyone is getting ready to pop the champagne, an evening star pattern appears on the chart. It's like a dark cloud casting a shadow over the market, signaling that the party might be coming to an end. Here's the breakdown. The first candle is a long, bullish candle representing the continued enthusiasm of buyers. The second candle is a small-bodied candle, either bullish or bearish, that gaps up from the first candle, signaling indecision in the market. Finally, the third candle is a long bearish candle that gaps down from the second candle, confirming that the bears are now in control. This pattern tells us that the buying pressure is weakening, and the sellers are starting to gain the upper hand. It's like a tired boxer finally starting to slow down. The evening star pattern is particularly ominous when it appears after a prolonged uptrend or at a significant resistance level. It's like a canary in a coal mine, warning traders that the bull market might be running out of steam. So, be wary of this bearish reversal pattern, traders. It's a sign that the bears are lurking in the shadows and they're ready to drag the market back down to earth. There you have it, traders. We've just unlocked the secrets of the top 7 candlestick patterns that every crypto trader needs to know.